Hey, thanks for joining me. In today's video, what I want to do is share with you some insight on why verticals are a great strategy, even if you have a small account, or maybe you just don't want to trade very heavy. You might have a lot of long-term investings that you just bought some stock on, and then you want to do some play money. And one of the great ways to do this is with vertical spread. So I'm going to show you this concept and really give you some insight on how you can risk a lot less and still work kind of your trading account, investing account, or even just use vertical spreads to complement what you already have going on. Now, a lot of the things that we're doing right now is coming from our upcoming course that's just launched. This is the Options Mastery Verticals version 2.0. So we've reworked this course. And as you take a look at this course, it's about 18 hours long right now and 42 videos. So there's a ton of information and knowledge about it. And if you grab this course before the end of the month, November 30th, then you do get a promotion and discount and get some money off. But we do cover a lot of things in here. So anyways, check it out. Go to the tradersfly.com website. When you go there, you can see kind of this link there and go from there. Link is also in the description below. All right, let's check things out with vertical spreads and look at how we might do this. I'm going to show you this example with Starbucks. I think it's a nice, simple example because Starbucks is, around $90 a share. It's not a super expensive stock. It's not a super cheap stock. It's also not one that's very wild and crazy. It's kind of there as an average, I guess, consumer stock there. They sell coffee, right? So as we look into this, for a lot of people, they might go in and just buy some shares of stock. And this is the typical way that you might trade things. And if you go ahead and buy 100 shares of stock of Starbucks, what it's going to do is it's going to cost you about $8,985. So that's quite a bit of cash to put up for just 100 shares of stock. And one of the ways that you could go ahead and kind of combat this with doing vertical spreads is, let's say you want to put on a little bit of money and you think, hey, Starbucks is going to go up. So what you could do is say, okay, I'll go maybe 46 days out in the next month and a half or so. I could go out and let's say buy a vertical spread. And just like you would buy shares of Starbucks, you could buy a vertical spread. And I could do a $2 wide, $100 of risk or so. And that'll give me about $110 of risk or so. So there it is, $110. So I'm risking about $110 to maybe make 90. So when you look at it percentage wise, I mean, that's pretty good, but I get some upside exposure just like you would by buying shares of stock, but I'm only risking $100. You don't have to risk, $8,000, $9,000 just to be able to buy 100 shares of stock. Now, could you buy just one share of stock? Sure. You could buy 50 shares of stock. You could buy 2 shares of stock. That's another way of doing it. But my point here with a vertical spread is I could risk $100, $100 to make $100. Okay. I could go just one more dollar up because that'll make it a little bit more even. There we go. Now I'm risking about $105 to maybe make $100. So you're taking a chance of, okay, if it goes up, even then, if it goes up to $30, $40 that you're making $40 on 100, that's 40% in your time frame. So you have to start looking at it from a percentage basis. But that's what's going on here is that, look, I'm risking a lot smaller amount. Now you could also risk even less. So let's say I just do a $1 wide, I'm risking $50. Okay. $50 right here to maybe make $50. Okay. And that's, where else can you really risk that much? It's a lot cheaper than just buying the outright stock. Even just to buy one share of stock will cost you $89. Here I'm risking 50. And if you want to go even cheaper, you could go out of the money, although the probabilities are not as great. But here I could risk actually just $34. Now I need that stock to move a bit, but I'm risking $34 to maybe make $66. So my point here is that when you're trading vertical spreads, you could actually risk a very small amount. You don't have to risk a lot of capital or money. What most people think is that, hey, when I deal with options, I have to risk a lot more and then I have to trade heavier and I need a large account. But with vertical spreads, you could see I'm risking $34 right here on this trade. I could be just risking $34. But granted, I do need it to move a little bit. If I go a little bit closer to about the 90, 91, I could risk just $50. So it allows you to just structure things. And then if you want to trade larger, yeah, of course you could do 10 contracts, and you could spread out the width and just do a little bit wider. And now you could put up $1,000. And if it goes up a little bit, make $200, retirement money or income, or just grow a little bit of your account in your own way, and then take it off, right? Usually these won't go all the way to expiration. You're not trading them that way. They'll move and you take them off. Okay. Or they pull back, you got to wait. And then when they snap back up, you might take off a contract or two or three. And that's the way that they kind of play. But my point here is that if you're thinking that trading options requires a lot of cash and capital, and maybe you've seen somebody show you verticals where you're selling verticals, where we go in and just, let's say, sell a vertical spread out here, out of the money, where we're trying to make $50, but we have to put up capital-wise $300. So you're making 50, but you got to put up 350s, right? So 350 I have to put up to maybe make only $50 or $49. Selling vertical spreads, you can also do that, and we do cover that in the course, where if you take a look at it, there are sections to that. But my point is that if you want to just trade lightly, you could also do it that way. You could risk less capital. So right here, so we do cover selling out of the money vertical spreads. And we also talk about, buying vertical spreads and buying at the money vertical spreads. So there's a lot of things you can do with vertical spreads. And the purpose behind this video is to show you that you don't have to risk a lot of capital if you don't want to. If you'd like to, you can. But if you don't want to, you don't have to. So vertical spreads are very flexible in what you can do. And you're able to structure that trade in so many different ways, as long as you understand how to set up the verticals. And that's what we cover in the course. So I highly encourage you to check it out and take a look at it. Just visit the website at tradersfly.com. And then you can go ahead and click this button right here with the logo, and it'll take you kind of to that page, and you'll learn a lot more about it. Scroll down, there's a lot of content and topics, and we're going to continue to add to this. We'll do some more trade examples as we continue to expand on the course over the next couple of months, as I do some more trade examples and strategies here for you guys. That way there's just some different market conditions to show you some trade ideas and examples. But the point here is that verticals are very flexible. You could do them in the money, out of the money. You could do two verticals on a vertical on the left side, a vertical on the right side. So I've got one here on the left side. I could do another one here on the call side or the right side. And then I'll have two verticals, one here, one there. And now I have kind of a non-directional trade almost. So there's many things you could do with verticals. And really there's sky's the limit of really where your thought process is and your creativity is when it comes to trading verticals. So I highly encourage it. Check it out. Go to our website, tradersfly.com. Once you're there on tradersfly.com, scroll down, you'll see that vertical spreads course. This is going to be version 2.0. And if you get it before November 30th, there is a promotion discount. So always keep learning and pick it up, and that way you can continue to expand and evolve with your knowledge and education when it comes to trading verticals. All right, so all the links are in the description there below. Also check out the website. There's a lot of great freebies, PDFs, downloads that you can get. You can also get on our newsletter list, so that way you get updated as we release other courses, products, or free videos and content. We have some live classes coming up here in about a month and a half or 2 months as well, that I'm starting to plan out, and we'll try and get those going maybe after the new year, and that should be kind of a nice new fun adventure to start the year. So check it out. Thanks for joining me. Enjoy the next day ahead or the week, and I will see you next time.